Legends, hope you're well. Welcome to the Daily Bias Show. We dig all charts as they relate to crypto. I have to say that this is not financial advice, just a reminder. I'm just some guy on the internet that looks at charts and talks through my view of the markets purely for educational purposes. I hope you're all well. It's the 16th of December here down in Australia. It's probably the 15th where you are. I dropped my weekly market update yesterday. I posted it on X. If you're not following me on X, please follow me there. That's where you'll get my commentary and it's where I'll post market takes. I'm pretty active on there. But I posted my full market update available for free in Substack on X yesterday. The theme, the Fed cut rates, does Bitcoin even care? So far, Bitcoin doesn't care, right? We've seen some bearish price action. And I just want to highlight here, out of the summary, overall, the liquidity backdrop remains tight, structural signals lean bearish, and Bitcoin continues to behave accordingly. So in this update, I go through in detail the economics and liquidity that I'm tracking and what those signals mean for the markets. I go through in detail the macro charts that matter, the signals that need to be tracked. I go through in detail Bitcoin's, the crypto market structure setup, Bitcoin structure, context around the levels, the key levels to be watching. And the theme has been for some time now that Bitcoin is macro bearish. We were looking for some type of counter trend rally. I can tell, we are due for some type of relief, but with some of the catalysts that we were tracking, we're not seeing much by way of response to any of these catalysts. And the data that's been coming through hasn't yet given us anything meaningful to expect any significant type of counter trend rally, right? So I want to bring your attention back to our stream yesterday where we talked about the FOMC level as a short-term gauge on how the market is digesting the rate cut and current liquidity conditions. And basically, I said that below the FOMC range and in the short term, we are aligned with, let me say that again. Before the FOMC range, below it here, so you can see here I've taken the daily candle from the day of the FOMC, and I'm using this as our short-term gauge on where the market participants are accepting, if they're above here, the Fed's gesture of a rate cut to incentivize risk-taking, or if they're rejecting the sentiment because they don't like the potential outlook for future liquidity or the potential outlook for the economy, right? So in the short term, we're using this FOMC level as a gauge to understand the market's interpretation and the market's actions around a response to the FOMC, okay, the Fed cutting rates. And we've plotted this FOMC level across many charts because we are seeing many cautionary signs of potentially the global markets shifting as well. Now, as I've called out, high time frame structures, especially across our major indices, are still bullish. But we had those initial signals that we were talking about, which introduces some caution, okay, where we need to be observing these signals and observing price action to understand if there's a big shift coming in markets, in global markets, that could lead to a lot more bearish price action in crypto and across the other markets, right? So hence the FOMC level has been on watch. And on top of that, we talked about the inside-outside bar candles, weekly candle setup coming into the FOMC, and we were specifically observing price action around the extremes of the outside bar of last week, of the week prior to FOMC. And I said if last week closed as a sweep of the outside bar's highs, then it's higher probability that this week will also be bearish. And I called this out in my market update as well. Okay, where I said here, the bearish signal. So last week closed as a sweep of prior week's outside bar highs. This is a bearish signal. This increases the probabilities that this week will be bearish. And we are seeing that start to play out. Okay, if I drop down onto the daily, we can see obviously we're starting to reject the FOMC level and push away from it, which swings my bias towards the short side. Okay, and on top of that, I'll just highlight here. So we had the sweep. Okay, today has pushed down. Well, we've just had a new daily open, but yesterday's candle from open to close down almost 2%. Okay, so we're seeing that push away. Now, again, this is my line in the sand in the short term. Okay, so what that means for me is I am looking to actively short the market as we're under these levels. Okay, and those are lower time frame trades and some of my shorter swing trades, okay, that I'm looking for, and I'm actively shorting altcoins at the moment, okay, based on this thesis that in the short term under this level, okay, and if we get above that FOMC level, okay, I pause and reassess. Now, when I say that I pause and reassess, it's not because my bias is turning bullish. Okay, if we do this, I don't pause and reassess because my bias is turning bullish. I just pause and reassess on the short-term picture and trajectory, because it could just mean in the short term the bulls are regaining some control, maybe to come back up in here into the flip zone, okay, or push a little bit higher before we continue to the downside. Now, why do I say continue to the downside? Well, if you've been keeping up with my channel, I'm macro bearish because our weekly structures and other price action signals confirm bearish, right? So they're all pointing to bearish. So we've got the weekly structure that's turned over. We've got the weekly bands that are confirmed bearish. And you can see here the bands only turn red when we're in bear markets and green when we're in bull markets. If you want these bands, just DM me on X and I'll give them to you for free. So we've got that. We've got the fair value gap that's been inverted. Okay, the weekly fair value gap on the demand side that's been inverted. And we've got a new fair value gap on the sell side. Now, usually the most recent gap on the demand or the sell side doesn't get inverted unless the order flow is shifting. Okay, and the major trend is shifting. So hence, we've inverted the demand side and we've also created new order flow on the sell side, reinforcing that the sell side is still in control, right? So what I'm saying here is that if we get above this FOMC level, that just means on the shorter term, I'm not going to be jumping into shorts because we could still push up a little bit higher, maybe into this major flip zone that I've been calling out. Okay, and that's where I would be looking at price into this zone to look for a macro short down for continuation. Okay, so let me just a little bit of chart hygiene. So let me just talk through in terms of the macro bias. I will also call out that this area now, this pullback is also sufficient in the way that I look at markets, in terms of market structure, to become our new weekly lower high if we come down into these lows. Okay, so what that means is as long as we take out these lows, even if we come down lower, this will now become our new weekly structure high. So why is that important? Well, if you think about the way price moves, and in particular, if we wanted to reverse structure and move from bearish to bullish, in a bearish trend, price moves like this, right? Lower highs and lower lows. And to turn bullish again, we would need to take out the most recent lower high, okay, and start creating higher highs and higher lows, right? So hence, when I look at price action at the moment, since we turned over, this is our weekly high, and we haven't created a new weekly high since, okay? And when I specifically look at price action, what qualifies a pivot point as a potential new high or low, or a structure level, is I want to see two inverse candles, consecutive inverse candles against the trend. So for example, when you see price moving up here, okay, I validate this as a high because during this pullback, there's at least two candles in the opposite direction, two bearish candles. So I validate this as the high, okay, once I see those two consecutive candles. And then once this high is broken, this is validated as the confirmed new high or low, okay? And it pushes up, see the same pattern here, okay, validated, here's the high, right? Because from between this area and this low, this is the highest point, so I take that as the high, okay? That's the low that was validated when this high was swept, okay, because it still touched this high. And that was our big trigger and signal. If you'd been keeping up with me on X or on streams, that was our big signal, our SFP signal of weakness and caution to be watching if there's a structure shift coming. So hence, right now, if I just do a bit of cleanup again, right now, we've got our two consecutive bullish candles. So this can be validated as a swing point. Okay. So if we come down, the most bullish scenario, if you wanted to be bullish, okay, what you'd want to see next is come down into these lows, and similar to what we did up here, what we did over here, okay, you would want to see sweeps of this low and failure to break down here. Okay, so on the weekly time frame, you don't want to see us closing below this low. Then you'd want to start looking on the lower time frames, such as the daily, to see if we can start seeing structure shifts and reaction to suggest that at least the lower time frames are starting to turn over. Because when that happens, you've got this sequence of sellers losing momentum or buyers stepping in, okay, right? Either or, represented in the sweeps and the failure to break down. Then based on the lower time frames turning over, if you start seeing some daily structure, you could see that the buy side is trying to take some control of the market. You won't have a confirmed weekly structure shift, however, till up here. So that way, if the weekly then trades back up here, and we're getting solid close above this level, okay, we're not just getting sweeps back up here, because again, that would indicate potential weakness. And if we're sweeping back up here, might want to come back down again, right? That's the fun of trading. We've got to analyze the signals at every key level, right? So here, if we're getting the sweep down here, then we're getting strong close above here, it's more likely that price wants to continue up. You wait for that pullback, and this is the pullback that you'd be looking to participate in to get long on, okay? And then you'd be waiting for that pullback to push back up. So that's how you could be bullish on this thing, right? Is if we did get that, that setup where price comes lower, and if you're watching on the weekly, we're not getting any breakdowns beyond this level. We're getting the sweeps, brings the structure high lower so that we can shift structure by getting back up here. Without that happening, the weekly from this point, if it just does this, doesn't take out the low, it could come all the way back up here, okay, and still be considered bearish because the weekly structure high is up here. So we could come all the way back up here and then turn over, you know, for a macro, to continue the macro downtrend. So hence, this is why it's critical to really understand market structure. And if you want to learn a bit more about market structure, on my channel, there's the Building Blocks series, and I go through exactly how I read market structure in the videos there. You'll see, I think it's actually called market structure, and there's another one, drawing market structure. It's all laid out there. Okay, market structure is the key to understanding how price moves and how the market moves. Okay, so that's what we're looking at. And this major flip zone, this is where I was initially looking for the bigger macro continuation short. Okay, so again, if we're coming back to price action like this, I was waiting for this next move up, okay, to short back down to the low for continuation. And I would have had higher confidence in the short, in a macro continuation short, okay, to do this if we came up into here, just because in terms of how I read the market, that would have been a higher probability area coming into the bands, coming into the weekly gap, coming into daily structure resistance. That's where I was looking for the bigger short. The fact that we are turning over here, okay, down here, and we're giving those signals already with the weekly highs swept out, outside bar showing some exhaustion in the demand side. It makes me think that we could just be in a bigger range. So we might come down here, sweep, maybe even if it's down here, then come back up and then potentially turn back over. Or if we do get that set up where it sweeps, maybe it wants to come back up here and then turn back over for the bigger move down to here. That's just some of my chart instinct. Okay, that's probably the extent of my speculation. I'll actually just observe the chart from here and see as we go. But that's just my thinking because I thought it would come a bit deeper. But we trade what we have in front of us. And like I mentioned in the stream yesterday, because of that sweep, how the week closed as a sweep, I'm looking for shorts. I'm already in some shorts now in altcoins, okay, on the lower time frames. But as I've mentioned in the past, I'm not really on this stream, on my channel. I want to more so share with you guys the bigger moves, the bigger macro moves, and how to stay aligned with the bigger macro trajectory. Because the shorter term stuff is so subjective. I could give you levels and tell you exactly where I entered, or say that I'm short here, and if it's based on a low time frame move, we could be trading the same levels, but I could be profitable and you might not be, or I might lose the trade and you might be profitable, because it's so subjective in how you then go about managing yourself and managing your trade, your system for execution and your system for management. So hence, I'm sharing my take on the market so that you understand the key pivot points, key bias, and the key areas that I'm looking for the biggest swing trades. And just so I hope that it helps you just kind of get a good read on direction of the market as well. Maybe if we're seeing things the same, I could be a point of confluence, or maybe I'm a counter signal for you. So hence that's how I'm looking at Bitcoin at the moment. So just in a nutshell, just to summarize, in the very short term, so when I'm talking about short term, I'm talking about this week and next, okay, and probably for the remainder of this month, this FOMC level is like the barometer for me, where if we start looking like we want to reclaim it, then that's where I'm pausing, and then I'm not eagerly jumping into shorts, because maybe we do want to trade up into these levels here. Okay, I'd pause and reassess in that time, and if you're with me on this channel, I'll lay out exactly what I'm seeing and how my approach might be changing. But below this level, I'm going to actively keep participating in the short side of the market, with the anticipation that we're coming down at least into these lows. And I'm okay and understanding of the fact that this might be our new daily high as well as our new weekly high, and it could just lead to further continuation. Now, we did have first day of trade for the week across traditional markets. So let's do a quick round the grounds there before we wrap it up. Okay, so some of the liquidity catalysts, just a reminder that we were discussing. All right, we were looking at rate cuts done. At this stage, we're not getting another rate cut. Well, the market doesn't anticipate another rate cut until April next year. Okay, so where does that leave us? We're still in a high rate environment, usually not consistent with bull markets or new price discovery parabolas. So just keep that in mind. QT appears finished, but if we look at the balance sheet, okay, which we got the first data read from the Fed for December last week, a 0.05% increase in the balance sheet, which is negligible. Like it's nothing. And we saw it in net liquidity, right? We saw a slight uptake in net liquidity, driven by the balance sheet and the government last week, the TGA wallet starting to drain. Okay, so at this point in time, unless we start to see the balance sheet heading up this way, this is the main driver of liquidity into markets. Okay, so that's what you want to see. If it's just going to slowly flatten like this, that's not really the formula for new massive price discovery parabolas. You know, because as we've seen in the past, what drives these massive expansions in net liquidity is an expanding balance sheet along with the government spending, so the TGA depleting. And if you look here, this yellow line is the Fed rates, the federal fund rates. Notice how we need to be in an ultra low rate environment as well to incentivize risk taking. So we're not in the ultra low rate environment. We're not seeing a expanding balance sheet as yet. We're seeing a slight uptick. So hence, it doesn't really support the case for a new price discovery parabola, so new all-time high. So I just want to lay that out and just remind everyone. I mean, if you've been keeping up my channel, you know where I stand with that. Again, it's all, if this is your first time here, it's all laid out in my weekly updates, which are free. Just jump on Substack. But anyway, so we wait for more data to come through to see if net liquidity is going to continue increasing or if it's flattening out. And if you want the net liquidity indicator, I give it away for free. Just DM me on X. All right, so there's nothing meaningful in the yields at the moment. We're still paused down here where we've been for quite some time. The market's not really expecting another rate cut till April, as we saw in the CME probabilities. If we start to see this breaking down, the market's likely expecting looser liquidity conditions and more rate cuts. So at the moment, we've just been paused in this range for so long. The DXY is an important chart to track right now. I've been calling out the cycle ending pattern. Okay, this pattern's present in previous tops in Bitcoin, and we're seeing a similar thing. It's in play at the moment. So again, just refer to the Substack to understand it in detail. But just like we're looking at the FOMC level on Bitcoin, we're looking at the same level on the DXY. Because remember, if the Fed is trying to incentivize some type of risk, okay, participants to take risk by cutting the rates, you'd want to see the dollar coming down to tell you that the dollar is going into markets, whether it's directly the risk markets into other currencies or elsewhere. That's for us to figure out. But in general, the DXY should be coming down to signal that price participants are moving out of the dollar. Okay, so if we get a divergence where the DXY is going up despite them cutting rates, and this is the level from when they cut rates, okay, this would be bearish for risk markets, because this is signaling that despite the Fed trying to incentivize participants to take on risk, participants are still moving into the dollar. Okay, so that's what we got to keep on watch. And as I've called out before, the extremes of this range are what we got to also monitor, because if we're just trending up here, that is the historical cycle ending pattern confirmed when we're trending up there on the weekly. And that would mean, or has historically meant, bigger bear market and potentially global risk unwind. Okay, so we got to just be careful of that. So we got to keep an eye on that, right? Here to here is the play zone, in my opinion. Here to here, that could support some type of risk bid. Okay, could. We'd have to analyze it as it develops. Below this level, and we've got to consider what the other markets are doing below this level here. We've got to consider what the other markets are doing, because we got to see if the DEX is heading down because of a loss of faith or confidence in the US economy, right? In that instance, risk markets will decline with the dollar, as it did in 2007, okay? So we can't just blindly assume that because the DEX is going down, risk markets will go up. So anyway, that's on watch. US JPY, we've got the Bank of Japan meeting, the policy rate meeting at the end of this week. So this is on watch. And again, we're tracking that FOMC level. This is our proxy on, or our signal on the carry trade. If USD keeps declining against yen, it's potentially a sign that participants are moving back into the yen. So it could be the carry trade unwinding. So this is just a signal we've got to track in conjunction with what the Bank of Japan does, because ultimately this is telling us if money is flowing back into the yen or if it's staying in the dollar. Above and trending up, that would support typically the risk bid, because it means that money's still flowing into the US dollar, which means it's potentially getting exported. Yen's getting exported, i.e. the carry trade, and then deployed into risk markets. So we keep this one on watch, especially as we head to Bank of Japan. This is the big level that I've called out in my market update, where I think we've got to consider that if we're back under this level, we've definitely got to be looking at what's happening in the Nikkei and other markets, because this could be the potential carry, the global unwind. And that carry trade underpins a lot of global liquidity. So that could be a major headwind for global markets. Now, the indices opened bearish, slightly bearish, call it, right? And again, we're tracking that FOMC level, and we've been calling out that we're observing potential topping distribution risk. Nothing yet confirmed, but some of those initial signs, just jump on any of my previous streams where I go through it in detail. But essentially this FOMC, again, is that barometer on the shorter term markets view, considering that we've had a rate cut. So we shouldn't see, especially in our global indices, we shouldn't see price trending below FOMC when they've just done a cut, okay? Because that's telling us that despite the Fed making money cheaper for participants, essentially, that's what they're doing by cutting the rates, the markets are still not deploying and heading into risk. So we just got to keep that on watch. So if we come back to the risk dashboard, I explained this one in yesterday's stream again. So we got Bitcoin, the RTY, and NVIDIA over the NDX and SPX, because the NDX and SPX will top last. So if you're, like I see many people doing on X, if you're looking at the NDX and the SPX and thinking to yourself, Bitcoin should catch up now, and hey, they're still bullish, so Bitcoin just needs to Bitcoin's going to turn around and become bullish, you're going to get caught significantly off guard, because Bitcoin is the fastest signal on global liquidity concern and stress. And we've seen that in the previous cycle tops, where Bitcoin tops around 280 days before the SPX and the NDX. So you see here, as it topped and started distributing in this giant range, SPX and NDX just keeps charging up, you know, structure intact. Okay, 2017 here, same story. It tops here, SPX and NDX keeps charging up until eventually November 2018, 280 days or so later, that's when the other two top. And then if you were hit back here, just blindly longing the market because you believe Bitcoin's going to catch up, you're longing a bear market that eventually took you much lower, right? So hence, this is a signal, and this dashboard is on watch right now, because when we start seeing these divergences, when the Bitcoin is the earliest and often tops first, then you get Nvidia diverging bearishly from the SPX, which we've started to see. These are usually the early signals on a potential top coming in. So we've just got to keep monitoring this important signal right now. Now back to our charts. Futures today have opened bullish, so we'll see how that plays out. Pretty strong bullish open, right? Almost 1%. But we're still in this distribution range. And I've said that until the problem with these big distribution ranges is what happens is once the structure low is tested, I'll use this example down here in the RTY, you see it a bit stronger, right? So once this is a significant test of the structure low where you had multiple days close below. Okay, once you see that along with the bands crossing bearish here, as we saw, back here where structure low traded below, price, you're not really out of the woods until you get significant closes above with follow through. Because what happens in these bigger distributions, I'll jump onto the Dow here, right? After testing the structure lows, they come back up to test the highs. And this is often where you get the sweeps and the struggling for some time before it breaks down. Okay, that's what the distribution typically looks like. So we've had a good response initially, but we've got to just keep monitoring this, because back below here, for example, this is the YM, which is the DGI, the futures, an index of it. So back below here where the internal daily structure low is, and back below these highs, this is significant concern building that this could be a bigger distribution, right? So hence that's on watch. So really we want to see what the trajectory are of these indices, because ultimately that guides us on behavior of Bitcoin. And if you're in the camp of anticipating some type of relief rally, counter trend rally, or you're trying to sell some type of bounce, well, you'd want these indices to stay bullish for as long as possible, because that means there's still potential in some type of rally, counter trend rally. Whereas if these just straight up turn over, Bitcoin is going to turn over more heavily with them, right? That's what the history typically looks like in that type of behavior, price action. Okay, so last thing we'll look at, we saw Nvidia had a nice little bounce. Remember, we were tracking that Nvidia versus SPX, that divergence, okay, which it usually does leading into tops. So we're see that divergence coming through, right? So this has got to be monitored. See it here, diverge. Okay, so you see SPX goes on to make highs while Nvidia is already starting to pull back. So hence this is on watch. All right. Last but not least, let's just finish on stablecoin dominance, because this is the most important crypto chart right now. And I talk about it on every stream, and I just did an X post on it as well, because too many people are calling bottoms without understanding what this chart actually means, and how far we are from a bottom if this just keeps trending up. Okay, so you see here, this was during the 2021 top. I'll put Bitcoin over this. Okay, right. This is during the 2021 top, where here, when we started trending above this breakout level of the range, and we had weekly shift in structure, weekly bands confirmed bullish. As we can see here, as the range high here, once this starts trending up, look at how much deeper we go. Okay, because this is essentially participants within crypto moving out of tokens, i.e. Bitcoin and altcoins, and moving into stablecoins. So hence, people are calling bottoms here, and I don't know, maybe they're just not looking at this chart, or maybe they're just not looking at charts at all, right? And if this continues higher, they're going to be in for a rude awakening, because Bitcoin can go much lower, right? And altcoins are going to go much lower. So this is on watch and remains on watch every day, because this ultimately is one of the best signals for internal crypto liquidity. So you need to be watching this. This is the chart. This is one of the main charts that I used to buy Bitcoin through here in January, from January to April in 2023, and to sell Bitcoin in January last year through here in September last year. And I posted this on X, right, not long ago with receipts. You know, this is one of the main charts that I used, along with obviously the Bitcoin price action chart. But this is one of the main charts I used to help time and guide my entries into Bitcoin. Right, and I just posted some of my orders here as proof. That's from January. This is the selling from earlier this year, in January this year, and September this year. Started offloading. Okay, whoops. Right. So hence, this is such an important chart to keep track of. Okay, so if we keep charging back up here, deep bear market. If we come lower, okay, that means potential rallies and relief. Like it means tokens are deploying back in. But given the context, it's more likely a counter trend rally. If it's anything else, I'll be guiding you at that time when we see it, okay, and we'll be tracking all the signals together. Legends, that's it for today's stream. Hope you got something out of that. If you did, please leave us a like. A comment, consider subscribing. That's what helps us in the channel. Follow me on X if you're not following me there. And yeah, my Substack, my weekly market updates I do in Substack is live. Again, if you just jump on my X, you'll be able to find the links there. I hope you're well wherever you are, and you have a good night, good evening, good morning, good day, depending on where you are in the world. And I'll catch you on the next one. Cheers, legends.